Hello everyone, welcome to EduTap and welcome to the monthly current affairs revision session. So I hope that you have prepared very well for this revision session, that is for the month of March 2025 for the RBI notifications and RBI press releases. So all the important and relevant RBI notifications and the RBI press releases we are going to discuss in this session. I have brought the MCQs for you through which we will be revising the RBI notifications and RBI press releases for the month of March 2025. Okay, and this monthly current affairs sessions, these are conducted on every Thursday at 6 p.m. Okay, and today I will be discussing with you the MCQs regarding the RBI notifications and RBI press releases that were released in March 2025. Okay, and this session is directly linked with the RBI news tab that is provided in the course. So all the course students that are also present, so you will be revising the RBI news tab through this session. Okay. So good evening everyone. Good evening Guru Raja, Nitya and Shrishti. I hope you are ready for the MCQs, and do keep note that how many correct answers you are giving, because at the end of the session we will see that how many of you were able to give all the answers correctly. Okay. So let's get started. As well as many of the students ask me that from when they should start the RBI notifications and RBI press releases. So I always tell them that start from March, start from the most recent. So start from March and April, and then you can go back to the February if you are able to do the March and April in the in the correct timeline. Okay. So then if you get time, then go back to February, but first at least start from the March month, because all the current affairs like the RBI notification, RBI press releases, schemes and such, at least start from March 1st and then keep on going back to February and January. Okay. So now before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel so that you can get the PDF of the session. And the link for the Telegram channel is provided in the description box below, and the PDF will be uploaded within 24 hours. Okay, so let's get started. I hope you are ready for the MCQs, and let's start with the first MCQ. Okay, so this is your first question in front of you. In the March, there were very easy notifications that came out. Direct one-liner questions can come from many of the notifications. So it is a low-hanging fruit. You just have to remember some core ideas, some core points, and you will be able to answer the questions if the questions come from the March notifications. Okay, so first give the answer of this question. I hope all of you will be able to answer this question. So these kind of questions are the easiest ones, but these are the questions that are always very confusing also. Okay, so you have to tell the theme for the 5th Digital Payment Awareness Week that was conducted in March 2025, and what was the theme under the Her Digital Payment. What was the theme of the 5th Digital Payment Awareness Week? So very good, Guru Raja, Nitya and Mayank. Absolutely correct answer. Yes, Shrishti and Suprava also. India pays digitally. So this is the theme. This was the theme for the 5th Digital Payment Awareness Week. Okay. So this Digital Payment Awareness Week we have discussed in detail in the Finance 360-degree session, where we discussed that why this Digital Payment Awareness Week is conducted. So Digital Payment Awareness Week, it is an initiative to highlight the impact and importance of the digital payments and to create awareness about the safe and the secure usage of the digital payment products. Okay, and the theme under the mission Her Payment Digital, under this mission that all the payments should be digital, under this mission the theme for the current year is India pays digitally. Okay, now coming to the next question. Again, this question is important, one-liner question it is, but you need to have the clear idea. So to manage the liquidity, the Reserve Bank of India has taken various steps to manage the liquidity, to boost the liquidity in the system. Okay, so what was happening that in our country, the liquidity, the money supply was becoming less, and RBI wanted to boost the liquidity, and for that the RBI took the various steps of conducting the open market operation, purchase operation, as well as there was swap agreements that was done. And there was also a swap agreement that was done for 36 months. That was a long-term swap agreement. So this was done for how much amount? 10 billions. Very good, everyone. Very good. So this is the amount. This is the 10 billion. So the swap agreement that happened for a tenure of 36 months. So the swap agreement was of $10 billion. Okay. So you can understand that this data is very important. So for $10 billion, there was the swap auction that was done by the Reserve Bank of India. So under the open market operation, purchase operation that the RBI was doing. RBI was purchasing the government securities from the banks and RBI was giving the money to the banks. So RBI was boosting the money supply. Under the swap auction, RBI was purchasing the dollars and RBI was providing the rupees, okay, to the bank, so that the money supply, the rupee supply can be increased in the economy. So this was the swap operation where the RBI was buying the US dollars and selling the Indian rupees to provide more rupees in the economy. And this swap auction, the long-term swap auction, is conducted by the RBI, that is for the period of 36 months to provide the liquidity for a period of time, okay. So this is the idea. Again, we have discussed the steps taken by the RBI to manage the liquidity, in which we have discussed the steps in detail about the swap auction, about the open market operation, meaning of these and such. Now coming to the next question, that which private sector bank was recently reported to have unearthed an accounting mismatch worth rupees 1,577 crores with an internal review of forex derivative transaction. So recently a very big name was attached, or a very big private sector bank has unearthed, or it has come up with the accounting discrepancy. So which is that bank? Okay, Guru Raja, correct? Okay, sorry. The other students, they are correct. Aditya, absolutely correct. Nitya, correct. So it is IndusInd Bank. It is IndusInd Bank. Okay, so IndusInd Bank is the private sector bank that was recently reported to have unearthed an accounting mismatch. Okay, and the Reserve Bank of India released a statement on the IndusInd Bank that, see, what was happening, that as soon as there was a problem that was identified by the IndusInd Bank, that there is a discrepancy that has come in the accounting, there were many speculations that were made by the market players that, okay, IndusInd Bank might close down. The depositors started to panic. So seeing the panic, seeing the wrong information circulating in the market, the RBI released a press release. RBI released a notification that you do not need to worry, because even if there is discrepancy in the accounting of the IndusInd Bank, still the IndusInd Bank's financials are very strong. IndusInd Bank has a good capital adequacy ratio. The IndusInd Bank also has a good liquidity coverage ratio. Okay, so it was said that the CRAR of the IndusInd Bank, that is the capital adequacy ratio of the IndusInd Bank, is around 16.46%. That is very good. As well as the liquidity coverage ratio of the IndusInd Bank is 113%. That is higher than 100% that is required. And there is also other regulatory norms that the IndusInd Bank is following. So I hope you can understand that this, again, I have taken up complete session on the IndusInd Bank and we have discussed the details about the IndusInd Bank. But you can understand that the RBI had to come forward to explain and to calm down the depositors, that you do not need to panic. The information that is going on in the market, you do not have to panic regarding that. Okay, so it was said that the capital adequacy ratio, that is the banks have to maintain, is 9%, plus the capital conservation buffer is of 2.5%. So banks have to maintain 11.5% of the capital adequacy ratio in totality. But the IndusInd Bank was maintaining 16.46% of capital adequacy ratio. So that is a very good capital adequacy ratio that the IndusInd Bank was maintaining against the minimum requirement of 11.5%. Okay, so minimum requirement of the CRAR is 11.5%, including the capital conservation buffer, as well as the liquidity coverage ratio to cover the needs of the depositors, to cover the withdrawal needs of the depositors. The liquidity coverage ratio should be 100%, but IndusInd Bank had the liquidity coverage ratio of 113%. That was also very good. So it was said that the financial condition of the IndusInd Bank is good, so the depositors do not need to worry about it. Okay, now coming to the next news article, that is regarding the SRO, account aggregator. As you know that from the self-regulatory organization, the questions, objective questions we have seen in the RBI Grade B 2024 examination. So the SRO topic is quite important, and there is a new SRO framework that was released for the account aggregators. Okay, so RBI has decided to recognize the self-regulatory organization account aggregators. So the RBI released the framework for this. You have to tell me that which of the following statement is or are correct in regards to the account aggregator framework of the SRO. So try to answer this question. Let's see how many of you are able to answer correctly. Okay, I'm getting the answer A. Okay, so applicant should be set up as a not-for-profit company registered under Section 8 of the Companies Act 2013. Absolutely correct. The shareholding of the SRO AA or the SRO account aggregator should be sufficiently diversified. That means a single entity should not have too much power in the SRO account aggregator. Okay, so that is also correct. No entity shall hold 10% or more of its paid up equity capital, paid up share capital. Correct. Now, to ensure balanced representation, the SRO account aggregator shall have at least how many unique entities, each from the FIUs and FIPs. So, from the financial information providers and financial information users, how many unique entities should be present in the SRO aggregator? Tell me very fast that instead of 20, what should be the number here? Okay. So, you have said that this statement is incorrect. Okay. I'm getting the correct answer. Yes, it is 25 unique entities. It is not 20, it is 25 unique entities. Okay. So the third statement was wrong. It should be 25, not 20. And that's why the first and second statements are correct, absolutely correct. The third statement was wrong. Okay. So you had to tell correct statements. So 1 and 2. That is A option is the correct answer. So SRO, account aggregator, first of all, SROs, they are the self-regulatory organizations, that is not for profit organizations that connect the entity regulated by the Reserve Bank of India with the Reserve Bank of India. Okay. So RBI approves the application for the SRO. If there is a SRO for a particular domain, that SRO connects the entities of a domain with the Reserve Bank of India, and the SRO has to follow certain guidelines. Okay, so they should be a not-for-profit organization registered under Section 8 of the Companies Act. They should have a sufficiently, like the SRO account aggregator should be sufficiently diversified with no entity that holds 10% or more of its paid up share capital individually or in concert with its group entities. As well as the SRO account aggregator shall have at least 25 unique entities, shall have sufficient members, we can say. So SRO account aggregator shall have at least 25 unique entities, each from financial information providers and financial information users. Okay, so account aggregator, how many of you know about the account aggregator? So I have brought a question for you at the end of the session where I will ask you about the account aggregator. Okay, so now if you want to know more about the details about the characteristics, responsibilities of the SRO account aggregator, and you want to have the complete understanding of the account aggregator, if you do not know about it, you can see this session where I have discussed the complete SRO account aggregator framework, and we have discussed account aggregator in this session also. Okay. Now coming to the next question. Which of the following statements correctly reflects the recent RBI circular regarding trade settlement with Maldives as per the 2024 MOU? So recently there was a circular that was, or the notification that was released by the Reserve Bank of India in regards to Asian Clearing Union mechanism, in which there was the discussion that happened regarding the MOU with between Maldives and India. So which of the following is the correct answer here? See the question very clearly, okay? Okay, I'm getting the answer. I'm getting the mixed answers. B, C, A. What is the correct answer? Actually, the answer is Aditya has given the right answer. Guru Raja has given the right answer. Mukund has given the right answer. It is C. It is C. The trade settlements with Maldives can be made in INR or the Maldivian currency as well as through the ACU mechanism. So actually there was a notification that was released by the Reserve Bank of India that in the wake of the MOU that was signed between India and the Maldives, or between the RBI and the Maldives Monetary Authority in November 2024. So MOU was signed for establishing a framework where the trade transactions, or where the transactions can be settled in the Indian rupees and the Maldivian rupiah. Okay, rupiah. So it was said that we need to promote the local currencies. So under the MOU that was signed in November 2024, it was said that we will be using our local currencies for the trade transaction, for the trade settlement, and for the other things we will be using the local currencies. Okay, in between Maldives and India. For the bilateral transactions, it has been decided that India's bilateral trade transactions with Maldives may also be settled in Indian rupees and the Maldivian rupiah, as well as in addition to the ACU mechanism. That means ACU mechanism can be used for the settlement of the trade transactions, as well as in the Indian rupees and the Maldivian rupiah can be used for the trade settlement. Okay, so this is the idea. Now, what is the ACU mechanism? So, Asian Clearing Union mechanism, this is a payment arrangement whereby the participants, so these are the participants, they settle the payments in for the transactions in between their countries using the local currencies among the participating central banks on a net multilateral basis. Net multilateral basis means, let's say that India has to make the payment. India has done the imports from Maldives and India has to make the payment of rupees 1 lakh. Now Maldives has done the imports from India and Maldives has to make the payment of 1,20,000. So instead of transferring 1 lakh to Maldives, instead of transferring 1,20,000 to India, what will happen that only the net transfer will happen. So Maldives will transfer 20,000 rupees to India. So that is the net multilateral basis. On the net multilateral basis, the transaction will be settled. Okay. So India had to pay 1 lakh rupees to Maldives. Maldives had to pay 1,20,000 to India. So the net transaction was done. That was of 20,000. This is the idea. Okay. So ACU mechanism, this is the Asian Clearing Union mechanism. This is a payment arrangement whereby the participating members, that is the participants, these are the countries that are the participants, the Bangladesh, Belarus, Bhutan, RBI, that is India, Iran, Maldives, Myanmar, Nepal, Pakistan and Sri Lanka. So these are the members. So they settle their payments for intra-regional transactions, the transactions that are happening between these countries among the participating central banks on a net multilateral basis. So transactions is settled on the net basis in the regional currency or in the local currencies. Okay. Now it has been said that the India and Maldives will be able to settle the transaction not only through the ACU mechanism but through the Indian and the Maldives currency also. Okay. So this is the idea. Now try to answer this question. Now coming to the next question. So regional rural banks, that is RRBs were earlier permitted to amortize their pension liability. That means they had to settle the pension liability like in certain years on account of RRB Employee Pension Scheme 2018. Now you have to tell me that which of the following statement is or are incorrect in regards to the recent RBI notification in this regards. Try to answer this question. So here, see what happened that, first of all, let's see one thing, that it was said that RRBs, they were earlier permitted. So it was said to the RRBs that all the people that are retired on or after, January 1, 1986 from the RRBs. So the employee of the RRBs that are retired on or after January 1, 1986, they it was said that they will get the pension from the RRBs from April 2018. But later on, and it was announced in 2019, and 5-year time period was given to the RRBs to make the payments. Okay. Later on, it was said that the payment, like the pension, the employees that are retired on or after January 1, 1986 from the RRB. So all the employees that are retired from the RRBs on or after January 1, 1986, so they will get the pension with effect from 1st November 1993. That means since 1993, whatever pension amount would have been there, so in aggregation, the pension amount has to be given to the employees or the nominee of the employees and such. So you can understand that it made the RRBs to pay a lot of money to the employees in the form of pension, and the RRBs, it became a very big liability for the RRBs to pay to the employees like that had retired. So RRBs, they now required to implement the pension scheme with effect from November 1, 1993 rather than from 2018. They had to implement it from 1993. However, in view of the difficulties expressed by the RRBs to absorb such a huge liability to pay so many of the employees the pension, it was said that the RRBs will not be able to do it in one go. So RRBs were provided with the 5-year time period. Okay, so this is the basic idea of the news article, and we have also discussed this in the session. So I have taken a session, a very small session, in that we had discussed the complete idea of the relaxation that was provided to the RRBs. So they were provided with the 5-year time period to complete their liability, right? So first of all, in this regards, it was said that the unamortized pension expenditure, that means the pension expenditure that the RRBs have to make in the future. So it was said that the RRBs have to give the pension since 1993, since the time period of 1993. So in the first, and this was divided into 5 years, that in 5 years the pension liability has to be finished. So in the first year they have to make 20% of the, at least 20% of the payments. In the next year they have to make at least 20% of the payments. So in each year at least 20% of the payment has to be made. So first of all, it is not minimum 10%, it is minimum 20% of the payment that has to be made. The liability that has to be covered, to at least 20% has to be covered every year in the 5 years. Okay, so the expenditure on account of revision in the pension, so the revision that has happened in this account, the expenditure may be amortized or it has to be covered over a period not exceeding 5 years, and in each year at least 20% of the liability has to be covered. So 20% has to be covered. Let's say in the 2 years 40% of the liability has been covered. So 60% is still unamortized. That means 60% of the liability is still pending. So that unamortized pension expenditure, that is the pending pension expenditure, would be deducted from tier 1 capital. This is wrong. It is said that the unamortized pension liability, that is the unamortized pension payments that is not provided till now, that cannot be deducted. That cannot be deducted from the tier 1 capital, because the tier 1 capital, it is present to absorb the distress of the RRBs. If we touch or if we use the tier 1 capital, this might lead the RRBs to become weaker. Okay, and tier 1 capital is to handle the distress and the problems if that comes in the RRBs. So it is said that the unamortized pension expenditure, this should not be deducted from the tier 1 capital. That is the idea. Appropriate disclosure of the accounting policy regarding the pension liabilities shall be made in the notes to accounts in the financial statement. That's correct. That whatever is the liability, you have to clearly mention it in the financial statement. So this is correct. So first one is wrong, third one is also wrong. So only the second one is correct. You had to find the incorrect statement. So the answer will be 1 and 3. Very good, everyone that has given the answer. So C is the right answer here. I hope this is clear. Still, if there is any confusion in this article, you can see the session about the relaxation provided to the RRBs. Okay. Now moving forward. So this was the idea, that the liability on account of the applicability of the pension scheme from 1993. So first of all, this will be applicable. The pension will be applicable from 1993, but the provision or the pension that can be provided in a 5-year time period, and minimum of 20% has to be provided every year. Okay, so this was the idea, and the disclosures have to be have to happen. Unamortized expenditure would not be reduced from tier 1 capital, and the circular is applicable to all the RRBs with effect from financial year 2024-25. This is the idea. Now this was mentioned in the RBI website. Okay, the point we have discussed. Now coming to the next news article, that is regarding the liquidity conditions. Okay, so on an assessment of the current and evolving liquidity condition in the financial system, the Reserve Bank of India decided to increase the aggregate borrowing limit under the statutory liquidity facility for the primary dealers. Okay, the limit has been raised from 10,000 rupees to how much rupees? 10,000 crore rupees to how much crore rupees? This change is effective from April 2nd, 2025. Okay, so there are the primary dealers. Okay, very good. The answer is 15,000. Good to see that you were able to answer so fast. So let's see that the standing liquidity facility, this is the facility that is provided to the standalone primary dealers. So basically, as you know, that how many of you know that the primary dealers are the market makers? They are the market makers in which market? Can you tell me? The primary dealers, they are market makers for the corporate bonds or government securities or foreign securities, or they are the market makers for which particular securities? Anyone? So primary dealers, they are called the market makers. They are called the market makers for the government securities. Okay, for the government securities market. Let's say that you want to sell your government security and there is no buyer. So many of the people, they will not want to buy the government securities because there is no liquidity in the government securities. And you might be afraid to buy the government security that if you want to sell it later on, no one will buy it. So in the government securities market, to maintain the liquidity, to continuously maintain the liquidity, there are the primary dealers that are the market makers. So let's say that you want to sell the government securities, you can easily sell the government securities. The primary dealers will work as a buyer for the government securities. Now let's say that you want to buy the government securities that is already issued by the RBI on behalf of the government of India. So if you want to buy the government securities in the secondary market, you can buy the government securities and the primary dealers will work as the sellers. So primary dealers, they work as the market makers, and they maintain the liquidity in the government securities. They work as the buyers for the sellers of the government securities and sellers for the buyers of the government securities. Okay, so this is the task of the primary dealers. Now the primary dealers also come under the regulation of the Reserve Bank of India. So the Reserve Bank of India, it provides the loans to the banks through the repo rate facility. Okay, so at the repo rate, the RBI provides the loans to the banks and the banks have to provide the government securities in the form of collateral. Okay, so at the repo rate, the RBI provides the loans to the banks and the banks have to provide the government securities to the RBI as collateral. Similarly, the RBI also provide the loans to the standalone primary dealers, and the standalone primary dealers have to provide the collateral to the RBI. Now this facility where the RBI is providing loans to the standalone primary dealers, so this is known as standing liquidity facility. Okay, this is known as standing liquidity facility. So based on the assessment of the prevailing and evolving liquidity conditions, the RBI decided to increase the facility from 10,000 rupees crore to 15,000 rupees crore under the standing liquidity facility. Okay, so standing liquidity facility, this keeps on this remains in the news, this remains in the RBI website also. You can understand that this was in RBI website in March, in April also. So it is said that as the repo rate has been decreased, as the repo rate is decreased from 6.25% to 6%, so you can understand that the standing liquidity facility rate is now, or under the standing liquidity facility, the rate that the standalone primary dealers will have to pay is 6%. Okay, so accordingly, the standing liquidity facility provided to the primary dealers from the Reserve Bank would be available at the repo rate that is currently 6%. So the RBI provides the loans to the standalone primary dealers or to the primary dealers, and this loan is provided at the repo rate. Okay, so this loan is provided at the repo rate. This is the basic idea. So standing liquidity facility, this is provided by the RBI to the standalone primary dealers or the primary dealers, and this facility, this loan is provided. This is the collateralized lending done by the RBI. So RBI takes the collateral for the loans that the RBI is providing, and these loans are provided at the repo rate. Any confusion in this? So I hope you know about the standing liquidity facility now. Okay, this is the support that is provided to the standalone primary dealers or the primary dealers to maintain the liquidity in the government securities market, and they are allowed, standalone primary dealers, they can borrow the money from the RBI at the repo rate, but this facility is known as standing liquidity facility. This is for the standalone primary dealers or the primary dealers. Okay, next question is this about the ways and means advances. Try to answer this question, and if there is any confusion in the previous topic, you can ask. So RBI has decided in consultation with the Government of India that the limit for the ways and means advances for the first half of the financial year 2025-26 is going to be 1,50,000 crores. Now ways and means advances, in the ways and means advances, so these ways and means advances, this is the short term loan that is provided by the RBI to the Government of India for the operational expenses. Now the rate that is taken for the ways and means advances is the repo rate. But let's say that the Government of India requires more money and the Government of India wants more money, so the Government of India can do the overdraft. So for that, the extra money that is taken by the Government of India over and above the limit of the WMA, so for that, for the overdraft, the interest rate that the RBI charges is 2% above the repo rate. Correct, absolutely correct. Okay, so this is the answer, and we have discussed about the WMA also. when we discussed about the interchange fee for the bank, we discussed about the WMA also, and the meaning of WMA and the meaning of the overdraft and such. So for the ways and means advances, that is the short-term loan that RBI provides the government, the rate that the RBI charges is repo rate. For the overdraft, for the extra money that the Government of India wants to take from the RBI, for that the RBI charges 2% above the repo rate. Okay. Now coming to the next question, try to answer this question. This is regarding the PSL guidelines. So PSL guidelines were recently revised, and as per the revised PSL guidelines, what is the answer of this question? Okay. So here you can see that under the major revision in the priority sector lending guidelines, overall priority sector lending target for the urban cooperative banks has been reduced from, very good, 75% to 60% of the adjusted net bank credit. That means UCBs, before it was said that they require to provide 75% of their adjusted net bank credit out, 75% of their adjusted net bank credit they need to provide to the priority sector, to the priority sectors like the agriculture and such. But now it is said that UCBs, they need to only provide 60% of the A and BC to the priority sectors. Okay. So the limit was decreased, the overall target was decreased from 75% to 60%. Okay. This is the idea. So here you can see that UCBs were required earlier to achieve an overall PSL target of 75%, but later on in the recent guidelines it was reduced to 60%. So again we have discussed the revision of the priority sector lending guidelines in this session. Okay, that you can see if you have not seen it, and if you want to know about the priority sector lending guidelines, or if you want to see the revision that has happened here, then you can see the session. If you have already if you are already aware about the revision in the PSL, then there is no requirement to see the session. Okay, but if you want to know about the revision, then you can see it. Now there is also one change that has happened in the certificates. So I hope you know that the banks, they have to like complete some targets, like the commercial banks, they have to do 40%. They have to provide 40% of adjusted net bank credit. Adjusted net bank credit, this is the credit that the banks are providing, deducting certain like certain investments or deducting certain bonds that are present. Okay, so this is the adjusted net bank credit. So net bank credit. So if we take the net bank credit, so 40% of the adjusted net bank credit the commercial banks have to provide to the priority sectors. Okay, similarly for the RRBs, the percentage is 75%. So this is the idea. So now let's say a particular commercial bank is not able to meet the target, and they are only able to provide 38% of the adjusted net bank credit to the priority sectors. Now how they are going to cover the target of 40%? So the 2% is lacking. So what they can do is they can buy the certificates, they can buy the priority sector lending certificates. Let's say that a certain commercial bank has done extra priority sector lending and they have achieved the target of 45%, while the other commercial bank has done less of the priority sector lending and they have only done the target of 38%. So 2% is still lacking, and they can buy this priority sector lending certificates from the other commercial bank that has done the extra priority sector lending. Okay, so the certificates can be traded basically. Now which kind of certificates? Priority sector lending certificate in the agriculture sector. So priority sector lending should happen to the 7 sectors: agriculture, the MSMEs, micro, small and medium enterprises, housing, export, the renewable energy, sustainable development, social infrastructure. So these are the different areas or different sectors where this priority sector lending should happen. So priority sector lending agriculture certificates or priority sector lending certificates for agriculture sector for small farmers and marginal farmers, for this particular area the certificate can be traded. For the micro enterprises, for the general. Now there is a minor change that has happened in the certificate category, that is for the small farmers and marginal farmers. If the priority sector lending certificates were traded for completing the target of the small farmers and marginal farmers. So this was counted in the achievement. So the certificates were counted in the achievement of small farmers and marginal farmers sub-target and agriculture target and overall PSL target only. But now it is said that the priority sector lending certificates, that is for the small farmers and marginal farmers area. So this certificates will be counted for the small farmer, marginal farmer sub-target, as well as for the weaker section sub-target, as well as for the non-corporate farmers sub-target, as well as the agriculture target and the overall PSL target. Okay, so this is the idea. Just this part has been extended. Okay, just this part has been like extended, we can say. So this is the idea. Now coming to the next question. ANBC and CEO BSc, it contains various various different terms it contains. So in some other section I can bring, because it contains so many of the different terms, so I will have to bring the whole chart, that what it includes, what it do not include. And for now you have to do it in the static, as it is not much required from the current affairs point of view. Okay, now coming to the question. So RBI has clarified that the ROU, that is the right of use asset, need not be deducted from the owned fund or the common equity tier 1 capital, provided that the underlying leased asset is tangible. So basically that, let's say a non-banking financial company is leasing a property, is trying to lease a property for 10 years, let's say for 10 years. So this property is a tangible asset. This property is a tangible asset. Now this NBFC has leased it for 10 years. So this has become, so NBFC has to pay for the lease, like every year some amount has to be paid. So this is the liability of the NBFC, and this property has become an asset for the NBFC for 10-year time period. Okay, so the NBFC in its accounts will show the liability that it has to pay every year for the lease amount, and NBFC will show the asset on its asset size, and there is the right of use asset, that NBFC can use this asset for 10 years, but NBFC cannot sell it. Okay, so it is said that there is no need to deduct such leased assets from the owned fund or from the common equity tier 1 fund. Instead, such right of use assets will be risk weighted at 100%. So just the property or the right of use assets, they have to be provided with the risk weight of 100%, because all the tangible assets of a entity is risk weighted at 100%. This is the basic idea. Okay, so this was the whole article, that in terms of Indian accounting standard 116 leases, most leases will be reflected on a leases balance sheet. So in the balance sheet there is the liability that the entity has to pay for the lease, and there is the asset, because the asset is coming in the balance sheet of the entity. So this is the asset that will be shown in the balance sheet of the NBFC or of the entity now. Okay, so this is the idea. Now in this regard, it is clarified that the regulated entities such as the NBFCs and banks and such, they shall not be required to deduct the asset from their common equity tier 1 or tier 1 capital, provided the underlying asset being taken on lease is a tangible asset. Okay, and that is the asset can be seen and touched and such. The ROU asset, the right of use asset, shall be risk weighted at 100%. That means it has to be provided. Now this asset has to be provided with 100% of risk weight. This is the basic idea. Now coming to the next question, try to answer this question. A very easy question. Okay, so I'm getting the answer C. Only Nitya was able to answer. What about the others? So here, the Financial Sector Assessment Program, a joint program of the IMF and the World Bank, this undertakes a comprehensive and in-depth analysis of a country's financial sector. Which of the following statement is or are correct in this regards from the India's point of view, we can say, okay? So since September 2010, the exercise has become mandatory for jurisdictions with systemically important financial sectors. So this exercise of the analysis and comprehensive review of the financial sector of the different countries, okay? So the financial sector, for the financial sector, there is a comprehensive review and the analysis that is done by the IMF and the World Bank. This is done for the jurisdictions that are that consist of systemically important financial sectors. That means if the financial sector of a particular country breaks down, so the whole of the world will be affected, okay? So systemically important financial sectors are such financial sectors in such countries that if this financial sector breaks down or the problem comes in this financial sector, so it will affect the whole of the world or the world economy or the other countries. So this first statement is correct, that since September 2010, the exercise has become mandatory for certain jurisdictions consisting of the systemically important financial sector. Currently, it is mandatory for 32 jurisdictions including India every 5 years and for another 15 jurisdictions every 10 years to have this kind of exercise from the IMF and World Bank. Last financial sector assessment program for India was conducted in 2017 actually, and the financial system stability assessment report was published by IMF on 21st December 2017. So first statement was correct, third statement is also correct, and that's why the answer is C here. Yes. Okay. Now this is the this session I have taken about the financial sector assessment program. That is the report released by the IMF. So just the basic idea you need to have, and in this session I had provided you the basic idea, okay? Now this is a homework question that I hope you will be able to answer. So all the students that are aware about the account aggregators, they will be able to answer this question, okay? Now, see, if you go to edutap.in, you can go to this website, and here in the free material you can get the blocks in which you will get the information about the particular examination, okay? So let's say you want to get the information about the job profile or the exam information you want to get, or you want to get the strategy, like you want to know about the strategy, that how you have to cover the different components of a particular examination, so that you can see, okay? Let's say you want to see the strategy for the RBI Grade B examination. So for the schemes, for the current affairs and such, so you can see in the block section, as well as here you can see that in the block section, or if you see in the main the main page of the EduTap, you will see that there is also the motivate me, where you can see the mental well-being, study life balance, inspiration and motivation. So whenever you feel down that okay, there is like negativity that is coming up or stress is building up, so you can go to this page and you can see the different blogs or the different articles that are written. That is a communication that is done with you, so that you can know that how you can handle the situation, or you can come out of it, or you can know the ideas that how you can come out of it, okay? Or you can get the inspiration and motivation. So this is the idea. That's why I was showing you this page, that in the free material section you can see the blogs if you want to know about the exam information, or if you want to get motivated, if you want to know how to handle the stress, or you want to just have a read of a good blog, you can go here, okay? As well as if you want to see the courses of the RBI Grade B or any other examination, you can see the courses also, what all you will be getting, who all will be teaching you. So all of this will be provided here, and you will get the complete information about the course, that what all you are getting in the course in this website. So you have to go to edutap.in, okay? So this is it. This is the homework question. Now, Aditya asked me about the ANBC and CEO BSc, so we can discuss it in the next session. I can bring the whole table for you, so that you can know that what is included in ANBC, what is not included in ANBC, though it is not much required, but I will bring it in the next session for you, so that you just have the brief idea that what is there, okay? But just the basic idea I will provide you. You do not have to go too much in depth in the ANBC, CEO, BSc, because those are just the technical terms that are not much required from the examination point of view, okay? Any confusion here, anyone? Now, all clear? So I hope you enjoyed the session, and we will now meet in the next session, that is at 10 a.m. on Saturday. Okay. Yes, actually this was the RBI News tab. In the RBI News tab, the articles that were important, so we have covered this in this session. Okay. Some of the in RBI News tab, some of the big topics are also covered in April. So according to the document, I am doing the coverage. Okay. So the RBI News tab document for March, it is consisting of these important topics, so that we have covered. Okay, then see you in the next session, and do give me the right answer of the homework question. Let's see how many of you are aware about the account aggregator ecosystem and the account aggregator. That is a very important topic. So this is it. Thank you everyone. Thank you for joining. See you in the next session.